Hello traders, welcome to your market update for Monday the 16th of March 2015. And last week we had come to a quiet market close on Friday after what was a fairly quiet week in terms of economic data. But the US dollar strength story is still in play, and leading into the FMOC minutes later in the week, I think that theme of US dollar strength is going to continue. And we don't have a lot of data between now and then, so therefore the market is heavily focused on what Janet Yellen has to say and her opinions for the future of interest rates and what the US government's policy will be throughout the remainder of the year. Whether we get full details on that is yet to be seen, and that's what the market will be anticipating, focusing of course on the interest rates. We do have a Draghi speech later on. The market may have a little bit of reaction to that, but I'm not expecting anything huge, and I don't think it's one that I'll wake up for to trade, but I will wake up for the RBA minutes, as I'm very interested to see what the minutes were for the recent interest rate being left on hold and what the future plans are. I believe that the future plans are to continue cutting rates, and if that is to come to fruition or be evident within the minutes, we will see the Australian dollar go a little bit lower. So definitely keep an eye out for that, but tonight we don't have a lot of information. And as I said, the US dollar strength, this is just a quick 3-month chart of the US dollar index, and we had a very strong day on Friday, a very strong week really, and we are continuing to grind higher at quite a rapid rate over the last fortnight's trading sessions after that consolidation period we went through, and I think that is potentially going to continue. Having said all that, it's quite interesting. I was giving some thought on the weekend to the Fed and the Bank of England potentially raising rates. And if we sit back and have a look, I don't believe that there is any great need or push for them to do so. I don't think that the economic data, inflation in particular, isn't evident that the governing bodies need to raise rates to try and keep it all under control. And that's what raising of interest rates is typically a tool used for. So they're not pushed to do this, but I think the US will continue on, and the BOE has remained relatively quiet, and they will wait and see and play it by ear and potentially not raise until a little bit after the Fed. And that could potentially continue to weigh on the Great British Pound US. But I think the Fed will ultimately go through with their plans of raising rates at some stage this year. But at the same time, I am cautious on that, as there is no real push or real need for them to do so. So it's just something that I've had it kept in mind. And we will look at the charts now. And I'll start off with the New Zealand versus the US. It's a daily chart. We seen last week they said that they were going to keep rates on hold for the foreseeable future. So the rates will be on hold for a long period of time, stating that they won't go up or they won't go down. So the market actually took a bullish lead from that and then sold off on Friday. This is the weekend candle, and today we're having a bit of a bounce. We do have this double bottom, and we do have a major resistance level here at 76 cents. I think we're going to continue to stay within this range-bound area here on the New Zealand for a little while until either the US dollar gets a huge amount of volatility and pushes, has some pretty large moves and pushes it outside these areas. Sorry about that. So we'll keep an eye on that, and I think that the range-bound market here could remain, but it doesn't mean we can't scalp and we can't make some money within this range, as it is quite a wide range of over 500 pips, or just under, sorry. So keep an eye on that. The Australian dollar, on the other hand, is very similar. We had a bounce on the back of stronger than expected employment data last week, and then we had a sell-off on the strong US dollar on Friday, and then since then we've just had a little bit of a bounce at the opening of the Asian session. I think that the US dollar strength is going to continue, and if we do get it on Friday, we will see it go much lower. Of course, tomorrow we have the RBA minutes, as I mentioned, and if this is to indicate further rate cuts is definitely on the table, the market will start pricing that in, and this low here should get taken out, and we could see some lower levels in the foreseeable future. However, if Australia moves back into the camp of New Zealand and say that they're going to keep rates on hold and just mull over things and wait to see if any of the recent cut is going to have any impact, and they see that the economy is not getting worse, that will be a big boost for the Australian dollar, and we should take out the recent resistance levels, and then this trend that's been going on for some time, if I zoom out, could potentially have come to an end for the short term. So they're the two scenarios. We'll have to wait and see what the minutes state. I'm still a bear on the Australian economy. I don't see that the economic data is improving to a satisfactory level for them to even consider a neutral stance, but it is Glenn Stevens, and we'll wait and see. I should go to the Australian versus New Zealand. This is a chart that I posted last week. It is a trade that I am in, where I'm in at $4.39 here. I got in when the New Zealand mentioned that they were going to keep rates on hold, and for me that was a big divergence in fundamental analysis, in terms that the Australian economy is looking quite weak, and the New Zealand economy is looking quite strong in comparison to the Australian, just purely on the back of New Zealand keeping interest rates on hold, and my belief that Australia will have to cut rates again at some time. So with that being in mind, the technical analysis kicked in, and we had this downward trading channel, and it rejected the upper band of the channel with a big engulfing bearish candle formation at the end of that news, and I believe it's going to continue lower. And I'm looking for levels down here I'll be getting out around in the $1 area. I definitely won't be pushing my luck at the even $1 parity level, because that is a massive psychological level, and it's one that I think will take a while for the market to get their head around and overcome and break that and sustainably hold below it. So I'll be taking profit well before there. I'll be getting out up in here somewhere, and it's just a trade that I'm doing using my fundamentals and my technicals, and that's how I operate in terms of longer term swing trading strategies, or in this case I'm trading within a channel, and it's just potentially a trade for you to keep an eye on. Now let's have a look at the Great British Pound. It's just come under immense selling pressure and broken many support levels, including this massive psychological $1.50 last week, and the selling with the US dollar strength continues. Now it's very interesting, I did mention last week that if the market did close on Friday below this major support level where we had a double bottom in 2013, that opens up for some pretty big moves to the downside. And if I zoom right out, you'll see that the market has bounced off this level in history ever since the GFC a few times over. Once we had here in 2009 when we had the European scare, we did have a breach below it, but then that was a false move below, and then it went higher. I am cautious of this, that we are getting to the lower end of a band, and in the pound, the UK economy isn't going that bad, so there may be a potential here at some point, and you can't call bottoms, and there's hundreds of pips to be potentially had to the downside here, so you don't just instantly buy now, but a carry trade for the future. If you are on an account that doesn't have swaps, well then it'll be one to definitely play out at some point in the future. I'll be looking for a fundamental reason to be getting in, but the UK looking to raise rates this year would definitely add support to the pound. So it breaking this level though does indicate some more prices to the downside, and potentially support here at $1.42. And somewhere in this range here, I do expect to see some support at some point. So it is a major feat for the price action to break below. Now, if we do get a very strong US dollar FMOC minutes, well then the price will definitely continue to slide here in the pound, and there's probably a lot of money to be had in the continuation trade of this momentum. The euro also has been brutal ever since it broke support here of $1.11, and it broke out of this range-bound market that we've seen here for some time. And the selling is relentless, as the UK economy, deservingly so, is being quite weak. I'm now on a 4-hourly chart. You've seen on Friday it actually closed below $1.05, and that was taking out the lows of the previous day. And it's quite a big statement that the lows are still in play, the bears are in play, and there's still going to be more lows to be seen. And I think that this low here will be taken out. So there's an opportunity to go to some shorter time frames here and look to swing trade this. There should be some resistance up in here at some point, and you might be able to short that and continue on with your bearish trades, adding to your positions, potentially trading breakouts of support and resistance. Here's some support. If it takes out that, you might be able to pick up a couple of pips as it momentum carries it through. And it doesn't look like the selling's yet to finish. Once again, if the FMOC is a very bullish statement from Janet Yellen, the bears will come in and punish the euro and the pound equally so. Now, the CAD's been an interesting one that we've followed for a while. The breakout of this triangle pattern, further momentum to the upside on the US dollar strength, I believe is going to continue. And we spoke about here when we had the profit-taking US dollar moment in the market that there was potentially an opportunity to get back in at lower prices if you missed the trade or you're already in, but you wanted to add to your position. And if so, that would have paid off, and we're still looking to go long for longer. As if we go to some shorter time frames, we're just in a really nice trend. I should fix up this trend line here. And this trend is set to continue. I don't believe that it's going to be too long before we test $1.29, and if we get a strong FMOC minutes, $1.30 isn't out of the question at all. I think that there's a fair bit more upside to this, providing the US dollar strength story continues. The US dollar JAP is a similar story. We do have this breakout of this pattern, and there is still some more upside to be had. We did have the market take profit on the US dollar last week, and that was an opportunity to get back in at historical support and resistance levels. And I think that there's more upside to be had. We have had a few days of it going nowhere on Friday, and then obviously that's the weekend, and now we're in today. We haven't had a lot going on, but I think things will heat up as the US dollar becomes in focus this week, and there's more upside potential to be had. I think that we will hold support here at $1.21. The next resistance is $1.22. All right, so that's the market update for today. Good luck, traders. I'll be back again tomorrow. Keep an eye out for the US dollar and keep an eye out for the RBA minutes. And until tomorrow, trade well.